Today we have a little bit of a little dose of alpha.
So Bryan, why crypto?
That's a great question. I would say I got into crypto. Really got into crypto Thanksgiving 2013. Was running a company, and I just got incredibly fascinated with it. A little bit of backstory. I wrote accounting software for the government, and I just saw how much was being spent, and I was like, wow, we're printing money. And so when Bitcoin came out, and I got hip to Bitcoin, the real idea of a de-inflationary store of value. It's de-inflationary because some of the tokens get lost, some of the tokens are never going to be seen again, and there's a maximum set of 21 million. So de-inflationary store of value, that rang true, right? So if you're into the inflationary expanse and how much we're printing, especially in COVID, there's been more money printed since COVID started than all the money printed before. It's just wild, right? So if you're looking for an inflation hedge, I think crypto is, you got rare metals and you got crypto. That's pretty much it. That what you have. I think that's the number one why I got into crypto.
Yeah, a new type of asset class, new type of commodity. My background's in economic philosophy. The idea that what could replace current currencies usually has to be some kind of overwhelming type of commodity that has very high demand. Get into more of that kind of stuff later. But definitely the newness of it attracted a lot of people. Good job getting in 2013. It took me another cycle to really dive in and take it more seriously. But you've got a background in fintech, in TradFi. Why will crypto disrupt this? What makes crypto special other than speculation, other than just the asset itself?
Well, I think it is the speculation that's very important, right? So other than speculation, number go up, number go down, we don't know how to price things. So we have markets. If you're on NASDAQ, if you're on New York Stock Exchange, there's enough liquidity to effectively price something correctly, but we don't really have methodology outside of that. Even the bond market, if you're not on Thomson Reuters page, their terminal for bonds, you kind of don't exist in the bond market, and your bond prices go all over the place. So I think if you want to put it into this way, and I think this is going to be a theme throughout why crypto, it's kind of like the minor leagues. Speculative price. I think that's the whole point, though. On speculative price, it's a very important feature. And what happens with these asset classes, if you're on the New York Stock Exchange, if you're on the NASDAQ, you have enough liquidity to be able to be priced accordingly and be priced correctly. If you're not there, even the bond market, if you're not on the Thomson Reuters terminal, the volatility of your bond pricing is up and down and left and right, and you have to go to all these other secondary markets. So why crypto is for price discovery and price speculation. And think of it as almost like the minor leagues, the try before you buy. Eventually I do see, we're seeing it with the ETFs now and the DATs. These tokens are coming onto the New York Stock Exchange and the NASDAQ. But they started with their price discovery on-chain in centralized exchanges. And so I think price discovery is one of its superpowers.
Yeah, price discovery, I like to think of it as real liquidity, real time. Even what you have currently with these TradFi markets, not everybody can access it. It's very restrictive who gets in, at what valuations they get in. It's very much set by market makers, kind of like the centralized exchange stuff going on in crypto. But that gets kind of broken over time as people see it, because you get to DeFi, you get unlocks. Retail does get allocations in some capacity, and they're kind of able to break the preset market making traditions that are difficult to overcome in TradFi. It takes the GameStop situation. It takes what's going on with AMC, and then everyone gets sued about it, and they entirely stop stock exchanges. So real time, real liquidity is very interesting. You've talked to me in the past that you have 5 philosophies of blockchain, and you obviously write really good articles. You get pretty deep in your ethos on things. Walk me through what your 5 philosophies of blockchain are. I want to be sold why this is going to be here long term.
So the first one is easy. We kind of went over it. It was store value. The second one is price speculation or price discovery. So low liquidity assets now have a place where price can be discovered. A capital formation. We saw this fundamentally in the ICO season. Whether you think that's good or bad, what accrued from it is anybody in the world for the first time could invest globally in a new form of asset and a new asset class. I think the fourth one I'm going to call is just the secondary market of secondary markets. So essentially what that means is like price discovery, capital formation, a secondary market. What if you don't have access to the New York Stock Exchange? For a long time, you couldn't trade options without like $25,000 in your account. Like Charles Schwab and all these guys wouldn't even let you touch options. So the secondary market allows for people with lower amounts. I mean, you can like lend half a penny if you want to, right, into a market, and still get an interest rate back. And if that's what you want, and then you can start to hedge exposure to your local currency. You can do options, you can do derivatives, you can do structured products in DeFi that you necessarily wouldn't have access to. So I see it as these block trades most of the time. Like what moves price in traditional markets is block trades, like billions of dollars, hundreds of millions of dollars of stock being repriced at a thing. So the secondary market at like 8 decibels long, 12 decibels long, depending upon your token, you can effectively buy at any amount that you want, a security, an asset, and things along these lines. The last one is I think all 4 of those are here today, right? We see examples of all 4 of those here today. My belief system or thesis for like 2026 is that we'll start to bring rate discovery on chain. So interest rate discovery against stables, interest rate discovery against home loans. We have the inklings of this in HELOCs, but I think over a long enough time horizon, we're going to have rate discovery globally across jurisdictions, across oracles for digital assets, and then eventually RWAs.
That's an interesting one. So recap, you said capital formation, store of value, price discovery, secondary markets, and then rate discovery. I think the first 4 are pretty much accepted. Liquid secondaries, prediction markets, doing everything, but rate discovery is really interesting. I'd love to dive in there a little bit more. We just had a big meeting between Trump and JP Morgan and more people that are in tune with what's going on in crypto. And it's like, why should banks offer 0% credit or checking and savings accounts for everyone when now anybody can get kind of the base rate of T-bills and build upon that and get your underlying 3.5%, 4%. It makes it really difficult as we start to disrupt these things. I think a lot of eyes were opened that were less in touch with TradFi when the yen carry trade or the yen basis trade broke down. That was interesting. Shut down the New York Stock Exchange. They reset it, set the rates back to 0. But the idea that you can borrow at one rate and supply at another rate as money can move as fast, like faster than a click, really does put into perspective that whoever is willing to pay the most should have the most access when capital can move really, really fast. What kind of products do you think would come about for rate discovery? How does that get organized?
Well, I think the big thing for like getting, traditional finances is like fixed rates. We're very used, and sales retail used to fixed rates. As that kind of comes in and comes into like right now, most of DeFi is like variable rates. But that's kind of like the rate discovery, right? It's fluid, then it's fixed, and then it's tranched. And then once it's tranched, people are going to want to load up on risk. They're going to offload on risk. And so the risk game isn't very public, right? So how people like calculate risk, how they basically price risk, and you have the bond market, you have like pension funds, you have like effectively like billion. We went to this fixed income conference, and we were like kind of proud. We were like representing Compound up there, and it would, 2.5 billion. And a bond trader came up to me. He's like, oh, 2.5 billion TVL AUM. That's great. I just traded $6 billion this morning, like before the conference. It's like, he just, the scale of these block trades of bonds are just like, it would put entire, they'll do the volume of like the entire DeFi market in the first hour in these bond trades. Now, much smaller like fees and basis trades, but effectively, like, this is what we're talking about here. What is the rate discovery? Like like I said, the Thomson Reuters terminal with the bond listings is like the primary market, and every bond issuer is trying to get in there. But like, what about the secondary market of bonds, right? Where are those rates discovered? We bring those on chain. We talked to a Mexican tequila company, right? So they wanted to start to do the pricing, the commodities trading, and what is the rates in the futures market of the different pieces. Like as you get into the supply chain and the global supply chain, like we don't have a unified rate discovery machine. And I think that's really going to be what happens. And the next couple of years.
That's fantastic. So read a lot of Milton Friedman, huge fan. He goes into a lot of how price is the fastest way to communicate anything ever. And that's why capitalism has the freest flow of information. The idea that nobody knows how to make a pencil, but pencils get made. And everyone understands, like, you don't need to know that there's a forest going on in whatever country you're getting your wood from. All you'll see is that the price is going up. And then labor will flow towards where where wages get higher. Everything gets relayed immediately in the price because you're looking for your supplier's price and you're looking for what your buyers are willing to pay. And that kind of arbitrage will naturally take place. I think this gets almost Orwellian, exposed through what goes on in prediction markets, where now you can control everything and it gets interesting. But the idea of this happening now faster and more real time with more transparent and public data for interest rates, things that are usually kind of hidden and buried, and then users kind of see them at the end and don't know how or why they showed up. Really, really high margin existing by players that aren't doing very much is going to kind of go away over time. That ends up being better for end users long time, should at least, as long as insurance keeps up. But yeah, interesting on the rates.
A little quick anecdote. I met this guy who's into crypto. He runs a lumber mill in Canada, right? And he basically kind of went through the process of how he got his biggest and best customers were in Mexico. And one point in time, they just called it up and started speaking in Spanish. He literally had to learn Spanish. And now he's one of the biggest lumber suppliers of all of Mexico. They take the lumber, then they make the furniture, and then they export it to the US. But it's pretty wild. So even in that standpoint, there's all of these market gaps that effectively don't have pricing. You have to grade the wood. They're just the qualifications and the standardization and the commodification of the world. Once we kind of get to that point, and it will happen, it's just that, like you said, the natural progress of things, these things happen, and we generally trend towards the most efficient markets. Things are qualified, things are commoditized, things are standardized. And then we have to understand what the rates are for everything. And the world should become more economically free.
Why does this lead to economic freedom?
Abstraction leads to corruption. And so how many middlemen are into a deal can potentially lead to regulatory gates and gatekeepers that are ostensibly artificial. And the more access that you have, the faster money velocity is. And it's Adam Smith, it just flows, and money velocity, commodity velocity, supply velocity helps make the world a better place. It makes the middlemen who used to do rent-seeking behavior more poor, but effectively it makes everybody else wealthier.
Okay, interesting. Productivity increase, supply of human productivity decrease, but yeah, it leads to inequality, but greater productivity. The rest can be sorted by hopefully parties better than governments.
So why does it lead to inequality?
Because it takes less people. So there's less jobs. There's greater margin for fewer people.
But we have greater access to more potentialities.
Who has greater access?
The creator, the producer. The producer of products are now less limited by capital. If there's real-time borrowing and there's real-time credit on a global marketplace, creators of products effectively have more access, and they're not limited by this idea that I don't have the capital.
Interesting.
Smaller and smaller buckets, right? So technology always, this is a philosophical technology. Jonathan Purdy once taught me this. Very smart dude. Technology always starts really big in really big blocks, and then we make it smaller. And then we make it smaller, and then we make compute smaller. And now we're down to computer chips that are skipping electrons. So when you buy something, if you wanted trees and you wanted lumber, you used to have to buy the land in the forest, right? Then you would have to buy the lumber mill. And then you were buying the stacks, and then you could only buy stacks in, $100,000 quantities. And then it trickles down. And now you can go to Home Depot and buy a piece of lumber. So it starts to compartmentalize. Yes, there's middlemen, but effectively, when it's effectively priced, the whole idea of direct to consumer with the internet drove out a lot of middlemen, but it made access to things that people didn't normally have access to.
That's interesting. I'll think on that. Yeah, read a lot of Friedman, read a lot of Heidegger. Heidegger goes into the range in which capitalism should be limited, kind of limiting capitalism's domain. And he gets into basically once you have artisans move past working with the medium that they go to, you start commoditizing everything directly. As commoditization exists, it goes more towards once the lumberjack is not also the woodworker, the further things get more efficient, the less they get connected. It leads to the commoditization of the earth and eventually the commoditization of people, which Yeah, we'll get to it in moral philosophy, but
Look, it's not a good thing, but I think it's inevitable, right?
I think both are probably true.
Yeah. Yeah.
Interesting. So we walked through your 5 philosophies. I got 2 of my own.
Eric, what do you got on the why crypto? Why did you get into crypto?
I like freedom. I was a radical libertarian before libertarian was cool, or I think it was always cool, before I knew of all the crypto people. And so I kind of dove into crypto because I needed a new side hustle. Couldn't card count anymore, got banned everywhere, but found a lot of kind of my people here. And so I fell in love with it. Instead of just breaking things, I wanted to start fixing them. But things that I fell in love with is one, the idea of qualitative analysis on, clicks or attention, rather than just like, hey, for all intents and purposes, fungible pretty girl with big boobs is worth more than the world's best poet. Like that, if she went away and never made content again, her followers would probably never know because there are a bunch of other ones, but she's doing 100 or 1,000 times as many clicks or as many views as the world's best poet. But the amount the world's best poet means to their audience is so much more significant, where their loss of content, their loss of life would like genuinely affect their followers who are missing and yearning for that content. This kind of level of inadequacy where Web 2 was developed only around marketing, and the only measurables, the only ways that they could tell, like to sell products is through marketing, is through clicks, is through views, is through like hours watched, whereas not all hours watched are created equal. So this kind of qualitative analysis around owning content, around monetizing differently is interesting to me. And then to just tools of freedom in general. Why do you have a Second Amendment right? What protects your Second Amendment right?
Bill of Rights?
Guns. Plenty of people want to take guns away, and it ends up coming down to, what was it? They had a bungalow out in Virginia like 6-7 years ago. It's like, come and take them. What protects gun rights is having guns, and then government's going to have to deal with it and react accordingly. Similarly, like it would be great to get rid of guns and not have gun violence, but once it exists, it exists. You can't stop people from having guns because guns exist. Gunpowder exists. People can make guns.
Yeah.
Similarly, if I'm worried, which I am, about this kind of, techno state that's completely restrictive, where people don't have freedom and get more and more controlled as things get more efficient, if we can build things that give people freedom that cannot be infringed upon, then the governments and the powers that be will have to react and build around those freedoms that definitively exist. So when you can have things like private data storage and truly ownable data, as opposed to being completely fed, like having truth consensus, like that's a thing now. Like, what's consensus truth? Like having other groups define what truth is long term. Like the historical impacts of that are like insane. So the ability to have your AI have private data lakes and customize on what your truth consensus is, and be able to retain information that's uneditable. Like I've got private versions of the Bible, which I'm Christian, private versions of the Bible that can't be edited. Whereas if it were in like global databases that could be impacted by other people, you can slowly change words over time. That kind of stuff is important to me.
John Locke, private property. It's like one of the key things is like private property is like an application. It's like a feature of capitalism. It's a feature of freedom. And what I think you're describing here is different applications of private property all across the stack of our lives, starting obviously with money, but what are the two biggest things that people get into? It's like health and wealth, right? Understanding like where your wealth is at, understand where your money is at, and not having somebody be able to take it away from you, right? The whole concept of like the brain wallet, memorize 12 words in a particular order, and you have wallet that you can travel across borders.
Yeah, I think a lot of Americans lose sight of that because it was Locke that wrote life, liberty, and the right to own property. And Americans are like, oh, it's pursuit of happiness. Like we went beyond, it's more than just that. Locke said what he said for a reason. Pursuing happiness is often fleeting. Happiness and joy are different. And
Web 2, just clicks and attention.
Yeah, yep. And the right to own property should be something that's unalienable, and it's something that, or unalienable. And it's something that will go away if we don't create the ability or the inability to remove it.
Yeah,
I'll say. So those are the two things that really brought me to crypto. Just kind of the idea that freedom in and of itself is good, and freedom can be used for terrible things. I mean, the same things that protect the Bible can enable horrible, like sharing the nuclear codes or, child pornography and like all these horrible things. But freedom can be used for good or bad. And if you don't have freedom, you don't even have the right to choose anymore. So that's why I'm in crypto.
Pro freedom over here. The qualitative attention thing is cool. I think, what I learned in doing a bunch of like Web 2 marketing was that if you A/B test long enough, your ads turn into porn or like softcore porn because that's what gets clicks.
Yeah, that's what gets
and you
clicks.
want clicks, you want attention.
We've gamed our own brain.
We get dopamine hacked. It's okay. It just is what it is, right? We are human and we're still animals and we have desires, and people are tapping into those desires at a greater capacity and with greater technology than we can consume or handle. It's like the whole idea of like social media binges and trying to get kids off of social media is like super important. Getting back to crypto though. So how does crypto help with qualitative attention? How does crypto help with tools of freedom?
So qualitative attention, things like NFTs, like direct monetization, new types of paywalls, new types of clubs. Think of, what are the top creator places right now? Not OnlyFans is one, but what's the normal one?
OpenSea?
It's got like a 12% vig. No, non-crypto.
Patreon? YouTube?
Patreon. Yeah, Patreon's a good one.
Yeah.
They'll take 12%. They're still really restrictive. There's some things you can show, there's some things you can't show. But as a creator, you don't really have true ownership of what you can and cannot do there.
No,
People still have, like, if you YouTube, like channels that were doing millions of dollars in ARR got completely deplatformed because they disagreed with what the current narrative was. Years later, you find out that they were sharing completely true information, and the people that deplatformed them knew it was true, and they lost all their audience. They didn't actually have freedom. They didn't actually have ownership. They can't reach out to the people who liked their content. They're completely trapped. And so this idea of like permissionlessly able to build, maintain, communicate with your audience without platform level restrictions, without middlemen that can shut you down unilaterally is pretty big. As for tools of freedom, I know I've talked about data storage like Jackal, it's one of my favorite, but also like private communication, the idea that Telegram CEO can get arrested in France and then, he's mysteriously let out. By the way, things are less private now, or Proton Mail has like backdoors, and so they could, we'll check if you're a terrorist. It's like, so you can check. So my messages aren't private.
Debatable.
Like, is privacy a human
property, right?
Yeah.
Is it privacy of communication? We want to go into that, double click into that for a second. Is discourse in and of itself of like idea expression doesn't mean like idea execution. Can you do it without privacy? It's really tough to do thought experiments that are like on the edge of like paradigm shifting behavior because of the nature of it. You can run a thought experiment and not act on it, and just to try to get into the devil of the details. But some conversations I have would be like incredibly embarrassed if it went out in public.
Yeah. Well, you should be able to like have your own thoughts. You should be able to talk to a trusted friend to go through these thought processes. Well, now if you have AI, shouldn't you be able to bounce ideas off AI, like completely theoretical like experiments? But there are things that like academics aren't allowed to study that are legitimate concerns and things that should be studied, but it's taboo, so they're not able to, so we can't make progress. You have to go through taboo ideas in order to make progress, in order to get understandings, come face to face with uncomfortable truths and work your way through it, find out how to progress. Instead, we're not allowed to. So if you try to bounce ideas off AI and then they record all of your questions and they go back and like, you're this, that, the other, and make ad hominems against you, then you don't really have this freedom to pursue just intellectual progress.
Yeah, exactly. I'm reminded of another Eric Weinstein, right? He says that the entire physics department of the entire country have been like governance captured and basically don't have the ability to express themselves scientifically and experiment outside of like the confines of a very few couple topics.
Academia has been destroyed.
All right. So we have to get academia on chain with Web3, right? And then figuring out what is truth and what is the perception, and is the truth viable and is within its scopes. Okay. We're going deep. Dude, we could go deep for a long time. Okay. So, but why now? Why crypto? Why now? What is it that gets you excited? We're in January 2026. What's going to happen, Eric?
Yeah. So we've gone through the last, at least 6-7 years of what's possible, but not at all what's practical. Airdrop farming, random multi-billion-dollar valuations for things with no paths to revenue. That's been frustrating to me personally. Like, I've been trying to drive things towards business. Well, now things are driving towards business, but it's also just speed running TradFi, and we're giving up any of the freedom that we had achieved for the purpose of making money, which was and is inevitable. On that side, there is a lot of really good opportunities. The tech is now mature enough to support just kind of attacking a lot of what has been retail owned or like perpetually owned by banks. This is called banks for stables. Neobanks as a concept where you get all the banking services aggregated with higher yields, better UX. So a lot of that also, we're early in AI. AI is starting to take over. Everyone's seeing that, but it hasn't. There's still opportunity in and with AI before it kind of takes everybody over. So it's kind of this unique timing opportunity where it's new enough, but it's also mature enough for real business to happen, knowing that the conglomerates that come out of this are going to be huge. They're going to be the next JP Morgan, but being able to be on the ground floor and part of this.
Just yesterday, a Circle did a deal with Fifth Third Bank where they're doing seamless integration into USDC in and out of your bank account, which is wild. Like that's amazing to me. Like banks versus stables. So you know, a lot of times people are like, "Oh, is it CFI? Is it DeFi?" This whole thing will eventually just be Fi. There's not going to be TradFi, traditional finance. There's not going to be centralized finance. There's not going to be DeFi. It's just going to be like one smooth implementation across the board, because that's over the long enough time horizon is what's most efficient. And so I love it. I love the integration with Fifth Third Bank and Circle. It just means that what we're doing is winning. What the industry is doing is winning.
So why now for you, Bryan?
Ooh, why now? That's a great question. I'm kind of like who I am. If you ever like Ikagagi, like those things of like, what you're good at, what is needed, what you're passionate about, what makes money in the world. I think I'm here. I think I'm baked and I'm stuck and I am this person. I am gonna do some form of crypto or DeFi for the rest of my existence. So the why now isn't necessarily, but what I'm most excited about is this onboarding of traditional assets. And RWAs are like very interesting. So you have like this whole kind of permissioned aspect. And I think that permission aspect over a long enough time horizon goes away. There's a couple RWAs out there that are pseudo permissionless, right? So like XUAT, like Tether Gold, Paxos Gold. These are kind of like one of the first RWAs that are out there that now you don't have to physically, if you trust that Paxos or Tether will physically handle the gold behind the scenes. And these are like some of the biggest companies in the world, and you trust them. Now you can get tokenized exposure to gold at anywhere in the world on a phone, on a device, and you're cool. Like you don't have to carry around gold in your pocket. You don't have to protect it. You don't have to, protect it with like, lead bullets and metals and spears. Like you can have access and exposure to that. And I think that's really cool. And I think another one of our clients, Re.xyz, Reinsurance, they have a reinsurance protocol. So anybody in the world can get global access to reinsurance returns. And I think that's what we're going to start. We're going to start with like the things that are like branded commodities, been used for 10,000 years. And I think we're going to have these kind of fundamentally rate discovery, because like insurance at its point is like pricing risk. And we'll see more and more insurance on chain and things that don't have necessarily like a physical nature. And then as technology advances, it'll become lower and lower and lower until, hey, like I can get my phone on chain and my apps are on chain. And like, I think what Solana is doing is phenomenal with the Seeker mobile. Like I got a Seeker mobile just to kind of like support the cause, where you have Web3 apps, you own your data, you own your phone. And so I'm excited about that. But to get back to the RWA point, one of the top 50 tokens now is Figure. Home equity line of credit's at 6.7%. From a consumer standpoint, I go on there and I just run like I normally would do, like Nerd Wallet or any of these places to get a home equity line of credit. They tokenize that, they put it on the blockchain, and they have an embedded interest rate with these tokens. I think it's phenomenal. So think big technologies, the purchasing of companies, like things that are really, really big that need fungibility, that more access will allow for more capital into it. These big unlocks, and then it'll get smaller and smaller until you can put your home or your car on the blockchain. And that's what I'm excited about.
Very cool. So when we do decks or we review decks or whatnot, usually the story is, like what's the problem you're trying to solve? How do you solve it? Why is now the right opportunity? But then it's also like, why is your team the ones that are able to accomplish this? So Bryan, why you? Why Alpha Growth?
So I think we sit in the middle of traditional finance in DeFi and in crypto. The whole career has kind of been back and forth in fintech, traditional finance, and crypto. Why me is that I love the game. And, when I was a kid, when I was a young adult, I started to kind of hack computers and I started to hack websites and phones for a while. I would do some penetration testing on phones. And I think what I always like to do and why me is that I'm trying to find the bug in the system or in the flaw to either financially exploit it for my own benefit, but also for our clients, like protect them from other people exploiting their thoughts and processes. And so you kind of have to have like a detective nature. You have to have like a hacker, experimental, curious, like how can I break this thing mindset? How can I break it and how can I put it back together better? And I kind of think like that's why me. I've, made a bunch of money. I've lost money on bad tokenomics. So I've had to learn tokenomics. I've lost money on Pool V2. I've made money on Pool V2, lost money on Pool V2. And so I had to understand the fundamentals of it. And so as a new mechanism design comes out, I'm always curious on, what's the game? Is the information density low enough for other people to get involved? I mean, there's some products that are coming out now, man, that are like, you require a doctorate to understand fundamentally how they work and how they play the game. And if you can't, ape in and click a couple buttons, the education cycle of that may not have that thing take off and take on, even if it's more capital efficient and harder to game. So I think my superpower is being able to hack into things, find the problem, solve the problem, but also explain it in a way that users via marketing, via content, and other people will get more comfortable using a more efficient product. What about you, Eric? Why you?
So bad at everything else. Any philosopher wants to design a perfect world, perfect society. Everyone tries. They run their own thought experiments. They write their own books on it. My background being primarily philosophy and the economic side of that, I always say that economists are good at making systems as efficient as possible, but philosophers design and break the systems. We've had new systems. A lot of the bad tokenomics you talk about, it's people, testing like, oh, well, let's compare this to that. And they're not even comparing the right things. It's CVL at the time when nothing has a path towards revenue, whatever it ends up being. I'm good at building systems that make sense and breaking ones that don't. Additionally, working with you in Alpha Growth for over a year now, just getting to kind of shake hands with enough people on every part of the stack, being able to bypass reality deadlock when complex deals are needed and everyone only has connections to one of the parties. That kind of like when we're talking about the pencil from Milton Friedman, it's like, and you're looking to your buyers, but for a lot of deals, you need to actually look 2 levels past that, and they don't have the insight into that. And so being able to kind of sit, on a cloud and shake hands with everybody at the same time because everybody wants the deal but can't be the first mover, is really neat to see, to kind of make complex deals which are required take place while we have the opportunity to do so. So
I think that leads into why Alpha Growth, man. I mean, like, seriously, like the way you're describing the pencil is like, what do you need to have a successful protocol or some successful like plan or deal in crypto? You have to have good tokenomics. You have to have liquidity. You have to understand lending. You have to understand leverage. You have to understand structured products. And a little short pitch on Alpha Growth is that we've helped deploy $50 million in grants and incentives across 200 DeFi protocols. We know everybody. So from market makers, we've helped with market makers, protocols, chains, DATs, funds, and everywhere in between. That's my little pitch on why Alpha Growth. It's like, to make that pencil, you have to have all the connections and all the relationships and have done it before. And we've done a different part of the stack for so many different protocols that we know who to go to for certain things. And so you don't have to make those mistakes. And I think that's why Alpha Growth.
What's your goal with the podcast? Who are you wanting to help? What are you wanting to bring to the world?
A crypto curious people with RWAs are like, how do I make money on a secondary market? If you get more monetary velocity on your asset, it should increase revenue for your said asset, access and goals. I think that people that are crypto curious, people that are like, how do I get involved with crypto? How do I take my business to Web3? And then effectively, that is where Alpha Growth comes into play. And just people that are knowledgeable. We'll hit up like, I want to talk about certain events. This was more of like a basic one of like, why crypto? Why now? But no, it's a very event-driven business. There's stable coins, there's lending, there's bridges, there's hacks, there's leverage. There's perpetuals, there's commodities trading, there's permissionless, consensus. I mean, it's a massive, massive topic. So trying to keep it at a level where people get some real utility out of it and understand how they can play the game.
A lot of the big YouTubers, the big content creators, they're not the actual builders. They're not under the trenches. They get to very simple narratives. This isn't going to be the average run of the mill, like intro to crypto. What is DeFi podcast? This is going to be much more high level. So primarily for people who should be somewhat crypto savvy and or connected to TradFi, so that like we're not going to completely remove jargon. I think we've said RWA 10 times and never said real world assets. You got to be enough in the space, but if you are enough in the space and you want a little bit more breadth around what's going on in the world, really in the trenches, we're working with everybody building all of the real new stuff. We're going to bring them on here for you guys. We're going to let them show you what they're doing. We'll try to keep it less technical and more high level, what it actually means, what's actionable, to give you the buzzwords, the topics and whatnot for you, the audience, to be able to move forward with your jobs and make educated decisions and be aware of what's new before your everyday YouTuber who's seen it well after the fact, read a white paper 3 months after it launched and did a video tutorial, is finally seeing it, which is a year later.
Yeah, let's get some builders on here.
Well, Bryan, thank you so much for lending us some of your expertise. It's an honor working with you. This is going to be fun.
Eric, thank you, dude. This is phenomenal. We should do this every week.
Deal.
And that was a little dose of alpha.